This week's episode covers 5 lesser-known number 1 daily percentage gainers with market caps mostly under micro to nano range for the trading week of March 10th to March 14th, 2025. Natural Life Ltd, a China-based company specializing in natural health supplements, bioactive food ingredients, and fragrance compounds, has been making some notable strides in both innovation and business expansion. For investors watching the company's trajectory, there's a lot to break down, from groundbreaking product developments to strategic partnerships and financial performance. Let's dive deep into what's happening and what it could mean for the company's future. One of the most exciting advancements comes from Natural Life's work in apple polyphenol extraction. This isn't just an incremental improvement, it's the result of a decade of research and development. The company has successfully developed a cutting-edge extraction process that not only enhances the quality of the final product, but also significantly lowers production costs. This is a major breakthrough, as apple polyphenol are widely used in functional foods, beverages, and supplements due to their strong antioxidant properties and potential health benefits. With an anticipated annual production capacity of 300 to 500 tons, this product could become a cornerstone of the company's revenue growth moving forward. But that's not all. Natural Life is also making waves with a game-changing $45 million sales distribution agreement. This deal, secured with a major distributor, focuses on BrockLife, the company's signature broccoli seed extract. Now, why is this significant? Broccoli seed extract has been gaining momentum in the health and wellness market due to its high sulforaphane content, a compound known for its powerful detoxification and anti-inflammatory benefits. This agreement means Natural Life has secured a strong distribution channel for a product with rising consumer demand, setting the stage for substantial revenue expansion. For investors, this deal represents more than just a revenue boost. It signals growing market confidence in the company's product offerings and business strategy. Beyond functional food ingredients, the company is also tapping into an entirely new and unexpected sector, the spirits industry. In a bold move, Natural Life is collaborating with a trading company to develop and distribute co-branded alcoholic health products under the names Green Spirit and Healthy Spirit. This concept blends the wellness industry with the social and cultural appeal of alcoholic beverages. It's a unique approach, one that caters to a consumer base increasingly interested in products that combine indulgence with health benefits. By leveraging their expertise in natural extracts, the company aims to create a new category of alcoholic drinks that appeal to health-conscious consumers while maintaining the social experience of drinking. This strategy not only diversifies their product offerings but also places them in a lucrative market segment that has seen increased interest in functional and better-for-you alcohol options. While these strategic moves are promising, Natural Life has faced some financial hurdles in recent times. The company's stock hit a 52-week low of $1.23, signaling challenges in market confidence. However, in a positive turn, the stock has since rebounded by nearly 40%, climbing to $1.72 as of early January. This kind of price recovery suggests that investors are beginning to recognize the company's potential, particularly with its recent innovations and business expansion strategies. It also indicates that market sentiment is improving, especially as Natural Life positions itself as a leader in natural health and wellness solutions. Looking ahead, the company appears poised for significant growth. The combination of cutting-edge extraction technologies, high-value partnerships, and category-expanding innovations places Natural Life in a strong position. As the demand for natural and functional ingredients continues to rise globally, companies with the ability to innovate and adapt to changing consumer preferences stand to benefit the most. For investors, the key takeaway here is that Bond Natural Life is not just another health supplement company. It's an evolving player in the broader health and wellness ecosystem. With its mix of science-driven innovation, strategic partnerships, and forward-thinking product development, this is a company taking proactive steps to drive long-term value. Whether it's through advancements in natural extraction methods, securing major distribution deals, or venturing into new market segments like functional spirits, Bond Natural Life is setting itself up as a company worth watching in the evolving landscape of health and wellness. Regencell Bioscience Holdings Ltd, a company at the intersection of modern science and traditional healing, has been making significant strides in its quest to revolutionize the treatment of neurocognitive disorders. By focusing on research, development, and the commercialization of traditional Chinese medicine, TCM, Regencell is carving out a unique niche in the medical landscape, particularly in the treatment of attention deficit hyperactivity disorder, ADHD, and autism spectrum disorder, ASD. Now, if you're an investor keeping a close eye on this sector, it's important to understand the depth of Regencell's recent business developments, as they are critical in shaping the company's growth trajectory. To start with, Regencell has been quite proactive in rolling out liquid-based standardized TCM formulae candidates that are tailored for ADHD and ASD patients. These three formulae cater to different severities of the conditions: mild, moderate, and severe. What makes this approach particularly compelling is that it leverages the ancient wisdom of TCM while integrating modern, standardized testing methods. This blend of tradition and modernity has the potential to disrupt the neurocognitive treatment space, an area that has long been dominated by pharmaceuticals that often come with significant side effects. Recently, Regencell's approach has garnered attention, not just because of its innovative methodology, but also due to the growing demand for alternatives to traditional treatments. ADHD and ASD are widespread, chronic conditions affecting millions of children and adults worldwide. Despite an increased awareness of these disorders, many patients still struggle with the limitations of existing treatments, such as the often heavy reliance on stimulant medications and the associated side effects. In this context, Regencell's TCM-based formulae offer a novel solution that's gaining traction, especially given the increasing skepticism surrounding pharmaceutical solutions in the broader public. In addition to these clinical developments, Regencell is actively pursuing regulatory approvals and expanding its clinical trials, which is a major catalyst for future growth. The regulatory landscape for alternative treatments can be challenging, but Regencell is making the right moves by aligning itself with key industry standards. This approach not only positions the company as a forward-thinking player in the biopharma space, but also places it in a favorable position to capture market share as demand for TCM-based treatments grows. Moreover, as part of its broader business strategy, Regencell is looking to enhance its strategic partnerships. By collaborating with research institutions, clinical trial organizations, and possibly even other pharma companies, Regencell is setting itself up for success in terms of research, validation, and commercialization of its TCM treatments. These partnerships will be critical for building credibility, gaining access to a larger patient base, and accelerating the timeline to market for its products. Investors should also pay attention to Regencell's growing presence in international markets. With a global shift towards complementary and alternative medicine, the company is strategically positioned to tap into markets outside its home base. Countries in Europe and North America, where there is a surge in interest around alternative treatments, could serve as valuable expansion grounds. These regions historically have been more receptive to novel healthcare solutions, which increases the likelihood that Regencell's products will find a strong foothold. What's especially interesting is that Regencell is not simply offering an alternative treatment, it's offering a complementary approach that could potentially work alongside conventional therapies. This positions the company not only as a disruptor but also as an innovator in how we think about managing conditions like ADHD and ASD. Investors, therefore, should look at this company as one that could be at the forefront of the next wave of treatment innovation in the neurocognitive field. The key to Regencell's future success lies in continued positive clinical results, regulatory milestones, and the effective scaling of its commercial operations. If the company continues on its current path, the potential for growth is substantial. With a unique, standardized product offering, a strong emphasis on TCM, and an evolving global market for alternative healthcare solutions, Regencell Bioscience Holdings Ltd is certainly one to watch. As the business landscape shifts towards more personalized and alternative forms of medicine, the company is well positioned to capitalize on this emerging trend. In the coming months, investors should keep an eye out for updates on clinical trials, new regulatory approvals, and any strategic partnerships that might further validate Regencell's market position. With the right catalysts, it could prove to be a key player in the evolving healthcare space. CervoMed Inc. is rapidly gaining attention in the biotech world, particularly among investors focused on the future of treatments for age-related neurologic disorders. As a clinical stage company, CervoMed has been making substantial progress with its lead drug candidate, neflamapimod. This investigational, orally administered, small molecule drug is engineered to target a specific enzyme, p38-alpha, within neurons in the brain, making it a promising candidate for treating neurodegenerative diseases like dementia with Lewy bodies, DLB, and early-stage Alzheimer's disease. For investors, it's crucial to understand the ongoing developments that position CervoMed to potentially disrupt the neurodegenerative disease treatment landscape. Neflamapimod works by inhibiting p38-alpha, an enzyme involved in inflammatory processes within the brain. By blocking this enzyme, neflamapimod has the potential to modify the course of disease progression in these neurodegenerative disorders, offering hope for patients who have limited treatment options today. What sets CervoMed apart is its approach to targeting synaptic dysfunction, the aspect of neurodegenerative diseases that is often reversible. In diseases like DLB, where patients experience cognitive decline and motor symptoms, restoring synaptic function could potentially offer a way to halt or even reverse certain symptoms. This is a particularly compelling feature, as most current treatments only address the symptoms rather than attempting to slow or reverse the underlying disease processes. The company is currently conducting the REWIN-DLB trial, a Phase 2b study evaluating the efficacy of neflamapimod in patients with DLB. This trial is a significant catalyst for CervoMed's future, as successful results could pave the way for further clinical development, including potential Phase 3 trials. The Phase 2b trial results are eagerly anticipated by investors because they could validate neflamapimod as a disease-modifying treatment in this space, something that's desperately needed given the limited options for treating DLB and similar conditions. But that's not all. CervoMed's research also shows promise beyond just dementia with Lewy bodies. Preclinical data suggests that neflamapimod could play a role in recovery after a stroke, opening up even more potential markets for the drug. The ability to treat neurological damage post-stroke would significantly broaden neflamapimod's applicability and could make it a key player in a much larger market for neurodegenerative and recovery-based treatments. For investors, these developments are critical in understanding CervoMed's trajectory. As the company continues to advance through clinical trials, the potential for neflamapimod to address multiple facets of neurodegenerative diseases presents a significant opportunity. The drug's ability to improve synaptic function in diseases like DLB and its potential role in stroke recovery make it a versatile asset in CervoMed's pipeline. There's also a growing recognition in the broader biotech market of the aging global population and the increasing burden of neurodegenerative diseases. This macro trend provides a favorable backdrop for companies like CervoMed that are focused on tackling the root causes of these diseases. The need for innovative treatments is urgent, and if CervoMed's trials deliver positive results, the company could find itself in a very advantageous position to capitalize on this demand. However, as always, investors should be mindful of the risks. CervoMed is still in the clinical trial phase, and while the preclinical and early-stage clinical data are promising, there's still a long road ahead. The success of the RE-WIN-DLB trial will be pivotal, but even then, additional trials, regulatory approvals, and commercialization hurdles remain. That said, if CervoMed successfully navigates these stages, the company could see substantial upside as it moves closer to bringing neflamapimod to market. As we move forward, investors will need to stay attuned to key milestones. Any updates on the progress of the RE-WIN-DLB trial, as well as any new data regarding stroke recovery potential, will be important. Regulatory developments and potential partnerships with larger pharmaceutical companies could also drive significant stock movements. With its innovative approach to neurodegenerative diseases, CervoMed is certainly one to keep an eye on for those looking to invest in the future of neurocognitive healthcare. The potential for neflamapimod to change the way we treat diseases like DLB and Alzheimer's is massive, and the coming months could be crucial for determining how quickly CervoMed can bring its groundbreaking treatment to market. Raytech Holding Ltd has been steadily carving out its niche in the personal care electrical appliance market, offering a unique blend of product sourcing, wholesaling, and design development services. For investors, this company presents a distinctive value proposition, not just as a wholesaler, but also as a collaborator in the design and development of cutting-edge personal care products. At its core, Raytech focuses on sourcing and wholesaling personal care electrical appliances, products that are increasingly in demand as consumers invest more in health, beauty, and wellness technology. From hairdryers to electric shavers, the market for personal care electronics has been growing consistently, driven by an increasing consumer preference for advanced, high-quality devices that enhance daily routines. Raytech is capitalizing on this trend by acting as an intermediary between manufacturers and retailers, ensuring that the latest and most innovative products make it into the hands of consumers. What sets Raytech apart from other players in the field is its additional offering of product design and development collaboration services. In a market as competitive and fast-paced as personal care appliances, this ability to help customers refine and develop products is a key differentiator. The company's design and development services allow it to engage closely with its clients, offering more than just a sourcing solution, but a partnership that drives innovation and customization. This collaboration not only strengthens client relationships, but also positions Raytech as an integral part of the product development cycle, ensuring that its clients can bring unique and marketable products to life. Recently, Raytech has also been focusing on expanding its product portfolio and increasing its reach into new markets. With the global personal care industry continuing to grow, fueled by rising consumer spending, a greater emphasis on self-care, and technological advancements in personal care products, Raytech's ability to source and offer differentiated products positions it well to capture a larger market share. The company is also working on enhancing its digital infrastructure to better support e-commerce and online retail distribution, which has become a critical part of the business as more consumers shop for personal care devices online. This is particularly important given the rapid shift in consumer behavior. E-commerce in the personal care segment has skyrocketed, and as traditional retail continues to evolve, companies like Raytech that can adapt quickly to these changes are set to benefit. By bolstering its online presence and developing direct-to-consumer channels, Raytech is positioning itself for long-term success in a market that's increasingly moving away from brick-and-mortar stores. Another significant catalyst for Raytech's growth lies in its ability to establish new partnerships and expand its customer base. With its design and development services, the company has the potential to forge deeper relationships with major retailers, as well as international brands seeking to expand their personal care offerings. As the company continues to strengthen its network and refine its product offerings, Raytech could become an even more influential player in the industry, particularly as demand for personal care technology continues to surge globally. Investors should also keep an eye on any news regarding Raytech's innovation efforts. The personal care appliance industry is rife with technological advancements, whether in the form of smarter devices, energy-efficient appliances, or those with a focus on sustainability. If Raytech can position itself at the forefront of these trends, it will not only differentiate itself from competitors, but also capture consumer attention in a rapidly evolving market. Overall, while Raytech Holding Ltd's business model is based on the tried-and-true combination of product sourcing, wholesaling, and design collaboration, its ability to innovate and adapt to the changing dynamics of the global personal care industry will be crucial in determining its long-term growth. The company's progress in expanding its portfolio, enhancing its digital capabilities, and forging key partnerships will serve as strong indicators of future performance. For investors, these developments present an exciting opportunity in a growing market that is showing no signs of slowing down. As Raytech continues to evolve with the times, its prospects in the personal care space look promising, making it a company to watch closely. eidmar Maritime Holdings Corp, based in Greece, is an intriguing company with a diverse portfolio that spans both the maritime and e-commerce sectors. With subsidiaries like MGO Global Incorporated and eidmar Incorporated, the company is strategically positioned to capture opportunities in both the shipping industry and the growing market for affordable luxury fashion. For investors, understanding how these two distinct business units operate and how they're being managed can offer valuable insight into eidmar's growth potential and market positioning. Let's start with MGO Global Incorporated, eidmar's United States-based subsidiary, which operates in the apparel, accessories, and footwear sectors. MGO Global is focused on brand acceleration within the affordable luxury space, providing a comprehensive range of services to both B2B and D2C customers. The company's platform facilitates everything from branding and design to production, merchandising, logistics, and digital communications. It's a full-service solution providing brands with the infrastructure they need to grow and scale in a competitive market. In an increasingly digital world, the demand for e-commerce platforms that help brands navigate the complexities of selling online has never been higher. MGO Global's ability to offer services across the entire supply chain, from licensing to distribution, gives it a distinct edge in the market. As consumers continue to shift toward online shopping, particularly in the fashion sector, the growth of affordable luxury is becoming a significant trend. MGO Global stands to benefit from this shift by helping brands leverage its platform to meet the evolving demands of the modern consumer, especially in the luxury segment, which is seeing a broadening of its target audience. What's particularly exciting for investors is the ongoing expansion of MGO Global's reach. As the company works with both business clients and direct consumers, it's tapping into two highly lucrative markets. The rise of e-commerce and the increasing popularity of affordable luxury products are key catalysts for growth. If MGO Global can continue to build its portfolio of brands and expand its digital footprint, it could become a major player in the fast-growing e-commerce and fashion sectors. On the other hand, eidmar Incorporated, the Greece-based subsidiary, operates in the maritime space, managing and chartering crude oil and refined petroleum product tankers. This is an entirely different business, but no less important for eidmar Maritime Holdings Corp's overall strategy. eidmar Incorporated operates a tanker pool through subsidiaries incorporated in strategic locations such as the Marshall Islands, Singapore, the UK, Dubai, and Hong Kong. These international operations allow eidmar to serve a global client base, managing the logistics of shipping vital commodities across key maritime routes. The maritime sector, particularly crude oil and refined petroleum product tankers, is highly sensitive to global economic and geopolitical factors, and investors must keep an eye on fluctuations in oil prices, trade routes, and regulatory changes. However, the recent trends in global energy demand and the recovery in oil prices are setting the stage for a rebound in shipping activity. As countries begin to recover from the impacts of the pandemic, global trade and energy consumption are rebounding, which is providing a solid backdrop for eidmar's shipping business. One key driver for eidmar is the growing demand for oil and petroleum products, especially in emerging markets. As these economies grow, the need for efficient and reliable shipping services to transport crude oil and refined products will continue to rise. The tanker fleet that eidmar manages positions the company to benefit from this ongoing demand, provided they can continue to optimize operations and maintain a competitive edge in the market. For investors, the combination of these two distinct businesses, e-commerce and maritime, provides a level of diversification that can help mitigate risk while capitalizing on growth in two thriving industries. MGO Global's potential in the booming e-commerce and affordable luxury markets, coupled with eidmar Incorporated's strong position in the maritime industry, makes eidmar Maritime Holdings Corp a compelling investment opportunity. Moreover, with the global supply chain evolving and the ongoing boom in digital commerce, eidmar's ability to capitalize on these trends with MGO Global's e-commerce platform could provide significant upside potential in the coming years. The company's dual approach, balancing the traditional, high-demand maritime sector with the modern, fast-moving e-commerce space, means that eidmar Maritime Holdings Corp is uniquely positioned to benefit from shifts in both global trade and consumer behavior. As always, there are risks to consider. Investors need to keep a close eye on global economic conditions, oil price volatility, and any regulatory changes that could impact eidmar's maritime operations. Additionally, the competitive nature of the e-commerce space means that MGO Global will need to continue innovating and growing its brand portfolio to maintain its edge. Overall, eidmar Maritime Holdings Corp has positioned itself in a way that allows it to capitalize on strong trends in two rapidly evolving markets. With strategic management, innovative platforms, and a global operational footprint, the company is well positioned for future growth. For investors, The recent developments across both MGO Global and eidmar Incorporated represent strong catalysts that could drive the company's expansion in the coming years. Thanks for tuning in, and I am definitely looking forward to our in-depth reviews of what next 5 spectacular number 1 daily stocks will be. New episode will drop every Sundays, so subscribe to get notified when it releases. Until then, check out our podcast playlist to catch up on previous episodes. Thanks.